Welcome to CIA. My name is Kyle. We look at data and facts in crypto projects, but today we're going to look at the macro in crypto because we've stalled. We have just been driving down the flat road. We haven't been going up or down too much. I mean, it's crypto, so it feels like a lot. I know a lot of people felt a lot of pain. I felt a little bit of pain too, but where are we headed? Are we headed up? Are we headed down? I'm going to go over what I think is going to happen and kind of where we've been in the last couple of weeks, why we saw that nice little pump in Bitcoin and in crypto. And like I said, I'll let you know what I'm doing too at the end of the video. So let's jump into the charts real quick. So let's look at what's happened recently. We've got a couple weeks ago, I made a video. We hit around 53 at the bottom here. And then we bounced back up, but there's really good reasons why we did. And there are really good economic reasons why we did. And I'll go over that in just a minute. But we got a nice stochastic RSI cross. We have great separation here. We have a little weakness this week, and that is not closed yet. This is a weekly candle. We are down on Bitcoin week over week, and a little bit of concern there. We'll be watching that, but all in all, it looks pretty bullish. These are two really nice big candles, and I think we've got some pretty good momentum. I think we're in a great spot in the economy. We're getting close to Fed rate cuts, and we'll look into that too in the video, and I'll kind of let you know what I think is going on there and what the market's going to do. Now, let's look at liquidity real quick. So this blue line, let's take away the orange line for just a second. This blue line is liquidity, and liquidity is basically how many dollars are coming into the system. I love crypto because you could just chart liquidity super easy. It's not like the general economy, but this is just stable coins. This is USDT, DAI, and USDC all added together. And what it gives you is how many people are like taking fiat and putting it into crypto. And we've had a nice increase here starting in around late June. And we've had a nice slope here. Matches kind of the slope we had earlier in the year and late last year. And this means we're getting new dollars in the system. It's basically like potential energy, right? We need dollars to enter the crypto market in order for prices to go up. You can see Bitcoin follows this pretty well. The one thing I'll say, it doesn't follow it on the way down. Just so the way I like to think about liquidity is kind of like a car. If you have a car with no gasoline and you're in front of a hill, you can't drive up the hill, right? You need gasoline to drive up the hill. Now, if you're on the top of the hill and you have no gasoline, or you do have gasoline, doesn't matter. You can drive down the hill. That's important because you can have liquidity entering the system. You could have a nice slope, constant, steady increase of liquidity, and you can still see a decrease in crypto prices. So just think about that. You can have a full tank of gas, and you can still go down the hill. Right? That's how I like to think about it. So you can see, for example, here in 2021, this is early November, we peaked out in Bitcoin. Bitcoin prices started falling. We entered the bear market here. This is the beginning, basically. This is the top. It's kind of a bounce, but anyway, it's the top, and we started decreasing our prices, entering the bear market. What was going on with liquidity? This blue line, it was going up. So just keep in mind that you can't, just because liquidity is going up doesn't mean Bitcoin's going to go up. But if liquidity is not increasing, you can't increase the price of crypto because there's not new money coming into the system. Something very important to keep in mind, something very important to know. But I do like to keep track of liquidity because, like I said, if it's stalled, we're kind of stalling here. We've seen some stalls for about a week over here in early January. These things are kind of normal. About another week here in April. You see these things, not too concerning yet, but if this trend continues, I'll start to get a little nervous. But for now, I'm not too worried. But why did Bitcoin prices, bounce here off that 53 line? Let's go into that real quick. I want to help you understand exactly what happened in the economy to make that, that kind of created that the investors to say, hey, this is probably a good time to buy. So the first thing that happened, this was about, when was it? It was July 5th. Yeah, so July 5th, we saw a tick up in unemployment. It was only 0.1%. But what's more important is the trend that's occurring. So you see the trend. We're about lowest unemployment was May 2023. Ever since then, we've been on a steady increase. Now, one reading isn't going to change things, but this trend does. And we've seen 3 months of increasing unemployment. And, the market said, hey, this is one of the Fed's mandates, unemployment and inflation. So they saw the unemployment and they're like, hey, little note in the head, unemployment has been increasing for the past couple of months. We're in a trend up. If we get, inflation data that's not scary, if we get inflation data that, either meets expectations or is slightly below, then, the market or the Fed's probably going to start to look at cutting. That's bullish for the market, by the way. And we're going to start to, maybe make an investment, right? They're trying to catch the bottom. These big, smart institutional money is trying to catch the bottom. So let's see if we can get to the other data here. Yeah. So then what happened was we had inflation, core CPI, come in missing expectations. It was only by 0.1. But what this means is, you also had a couple months of inflation data that, pretty much hit forecast or barely beat it. So softer inflation combined with, soft unemployment data tells investors that the Fed is going to be boxed into a corner soon and they're going to have to consider cutting. And what happened today? Today, Jerome Powell spoke, and he talked about where the Fed is on cutting rates. And I want to go over that because he made some pretty, I think they're bullish comments. They're dovish, which means that they're looking at, I think they're kind of looking at decreasing rates soon. The markets, the betting markets have bet that the first rate cut's going to happen in September. And that happened after those two readings that we just talked about. And why do I think the Fed is on track for September? Well, you can't say for sure because they didn't signal a rate cut, but he did change his language. Powell did change his language today. And what he did say was, he said, indeed, this is opening statements, by the way, in his presser today after the Fed meeting. And he said, indeed, we are attentive to both sides of our dual mandate. Now, why is that important? That is important because previous to today, the Fed was focused on inflation. They told us that their biggest concern was bringing inflation down, and they need to see inflation numbers come in softer to gain greater confidence they can reach their mandated inflation rate. Well, they don't have a mandated inflation rate, but their target inflation rate of 2%. Now we're about 2.6% in the last reading that the Fed watches, the Fed uses. So the Fed uses PCE, which is a different number than CPI, but they're pretty closely correlated. Now, that's important because I think the Fed's going to cut before 2%. And Powell actually said that in an interview on July 11th. He said in an interview that he is willing to cut rates before they hit that 2% rate. They just want to be confident that inflation will continue to fall to that 2% rate. So by him saying that they are looking at both sides of their dual mandate, unemployment and inflation, sorry to be a broken record, but this is like huge. That tells me that they're willing to cut with more bad unemployment data. And I personally think unemployment is going to be the trigger that causes the Fed to finally cut rates. So what else did he say today? He said the second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. And by good data, he means, he says this in his presser today. I think he said it in when he was answering questions with reporters. He said that's inflation data that is in line with expectations. So if it meets the forecast or is below the forecast, it doesn't even have to be below. It could beat the forecast, and that would give the Fed greater confidence that they could start decreasing the federal funds rate. And that is bullish for markets. At least the anticipation of the Fed cutting rates is bullish for markets. That's a whole nother video. We can dive into that, but that's important to know. So a dovish Fed, at this point is bullish for markets. And the last thing he said in his opening statements that I think is absolutely huge and should not be overlooked. He said, if the labor market were to weaken unexpectedly, which I think is what's going to happen, but he also mentions inflation. If inflation were to fall more quickly than anticipated. We're prepared to respond. And we'll see how it plays out. But these comments are huge. It's a little bit of a change. It's a reversal from what they've said in previous meetings. And I think this kind of tells me that they're ready to cut. Not, I don't think a September rate cut is certain. The markets are certainly betting on it. People put their money where their mouth is, and we have one unemployment data coming up here in the next, I think, week, and we've got two inflation data points coming up as well. So we'll see what happens in the next coming up in the next month. I think those will both be very bullish for risk on assets. There's a couple other things I'm going to be watching for, and we'll get into that in a second. But real quick, I wanted to share something with you guys. So if you get value out of my videos, I give some special tips, some special insights that have made me successful in trading and investing in crypto in the past to my newsletter subscribers. If you think those would be valuable to you, you can check out the newsletter below, and would love to get your subscription. Thank you. So Fed stuff is fun and all, but how does that translate to prices of crypto going up? And that's what we're all here for. So let's take a look real quick at the Dixie. The Dixie, I think, is a little bit of an underrated chart, an underrated metric for how the risk on assets are doing. And to be frank, we've seen a pretty big increase in risk on assets and stocks and crypto, despite the Dixie being strong of late. Now, I think the strong Dixie has actually caused crypto to kind of do that sideways, sideways consolidation that we've seen the last couple of months. But we've seen a change in the trend of the Dixie, and we'll see. We're still at a tipping point. We'll see if it continues. But look real quick at what happened here back in the beginning of end of June. So the end of June is kind of when we saw that we started to see that unemployment data came out, and we saw an increase in unemployment. The Dixie kind of started dropping, and then we started getting some PMIs, we started getting some inflation data, and the Dixie kind of started to tank. And what happened to Bitcoin? Bitcoin started to rise, right? And why this happens is the Dixie is a really complex indicator because there's a lot of factors that go into it. But very simply, most of the world's debt is denominated in U.S. dollars. A lot of the people who pay U.S. debt or dollar-denominated debt are international debt holders, and these international loan holders they basically have to pay more when the dollar is higher than they do when the dollar is lower. It also affects trade and other things, but the biggest thing I think is the U.S. denominated debt, and this isn't a big decrease here. You can see it's only like $2 from the peak over here to the bottom here. But when you add that up, when you multiply it among billions and billions of dollars worth of debt, you basically get millions and millions worths of savings, right? So people are governments and businesses are saving money on dollar denominated debt. Also individuals too who have loans on dollar denominated debt. So anyway, long and short of it is when the Dixie goes down, that is bullish for risk on assets, and that's bullish for crypto. You can see crypto increasing when the dollar's going down. Now, we're at kind of a tipping point, and what I'm going to be watching for is the Dixie's ability to break this support line. And, if we start to see it decrease below 104, I think it's going to be very bullish for the crypto market. And I'm bullish on crypto. I'm still holding my altcoins. And let's look at the altcoins market. So this is the others chart, others being all the crypto outside of the top 10. So everything below the top 10. And these are altcoins. And we saw a nice stochastic RSI increase. This week's candle hasn't closed, but it's looking a little bit weak right now. I would love to see this, this RSI cross continue with strength. And I do think we will see a lot of strength in this over the next month or two as we approach the September rate cuts, which I think we're going to see. But those are the two things I'm watching for. And we haven't seen an alt season yet. I still think we'll see one. I don't know how strong it'll be. We'll kind of assess that as we get closer. But for now, kind of in a holding pattern, and looking for hopefully prices to increase, Dixie to drop. So if you got value out of this video, we'd love to get a subscription from you. You get a notification whenever I put out project videos or another macro video, kind of talking about where the crypto market is headed. Thanks guys for watching, and we'll see you next time.